vertical SaaS and marketplaces are typically the two areas where it's expected the next month and years in embedded finance will hit the hardest, and also in marketplaces, because obviously the whole interaction on the marketplace where you get payouts, why not directly into a wallet of your provider.
Hello, I'm your host, Efi Pylarinou, and today I have the pleasure of connecting with Lars Markull, who is based in Berlin. Is that correct, Lars? Welcome.
Yes, correct. Hey, hi, Efi. Thanks for having me.
So we are in the DACH region from Zurich to Berlin. I was just thinking today, actually, that Germany has many fintech hubs. And this is not something new. I'm delighted to connect with you, Lars, for several reasons. You have a unique path. You're an investor, an entrepreneur, a content creator. You wear many hats. You've been in basically open banking and embedded finance, two areas that are connected. And we'll have the opportunity to discuss this. I want to mention that today you are the founder, the producer of the Embedded Finance Review, which is a newsletter focused on the topic. And we'll have the opportunity to talk about your background. You can mention it in our conversation, but I really want to start by asking you why you are in the camp that believes that every business will be a fintech, which is a mantra, I guess, that Angela Strange from Anderson Horowitz put out there, and now a lot of finance, but more non-finance people are becoming fans of. So over to you. Why do you believe?
I mean, I find it funny, like this quote. Or I mean, there's a whole. This is the every company will be a fintech company from Angela Strange is the title of a blog post from her, I think, which she has published, I don't know, in 2020 or something like this. I find it still interesting, and I think I shared it on social media or my newsletter a couple of weeks as well. I find it still interesting that this quote is like splitting people sometimes. I mean, there's not really a definition of like, what does it mean to be a fintech? I mean, when I hear people who have doubts with the statement, every company will be a fintech, when you ask them questions, why do you believe that? And their interpretation then very often is that all of them will be like banks that we know today, like traditional bank. They will have a license. They will be like a proper bank. Others like me, who believe in this statement, are more of the conviction that every company at one point in the future, and it's always quite easy to make predictions about the future when you don't put a time limit to it, but the expectation is that every company will be able to generate part of the revenue with offering financial services as part of their product. And I'm not naive, I'm not stupid saying all of this will happen in every industry tomorrow. I think what we can clearly see now, and that's also the reason, like for me personally, you mentioned it, open banking. I was in open banking from 2014 to 2019. So that was like in Europe. 2014 was very, very, very early. I guess I found my personal interest and excitement around being the enabler, being a little bit, let's say, the geek, the nerd around stuff or financial services, and then enabling others to build smart products on top of it. So if you ask me about something front-end fintech and or a B2C banking fintech, I'm very often the wrong person to ask that. But if it's about like, okay, how do you build in the background? How can you enable other features and functionality? That's something where I come in. So I've seen in my time in open banking, and I would say there's a clear distinction between open banking and embedded finance, and every company will be a fintech. But even though in open banking, I've seen very clearly that, and I was at our company, I was responsible for dealing with all these non-banks customers who were not financial institutions. And I saw very, very clearly that I don't know, like extremely speaking, when there was a 10th banker coming in and wants to build a personal finance management tool, the excitement was rather low because it was like same what we have seen many times. On the other hand, when there was a person requesting a chat with us who was, let's say, a founder or a leader in a prop tech SaaS software and says like, hey, I have no idea about fintech, but actually in my software, if we can integrate financial open banking data, I could make the life of my customers like so much easier and can create a better product. I think that's the point where I realized like companies who are not traditionally offering financial service are very often to offer these services better in a more contextual way. I mean, another definition of embedded finance is contextual finance, right? And everything that happens in fintech or in financial services in our lives always has a connection to the non-financial side. And I just believe that companies who are not fintechs, not banks, are very, very often much better positioned. But yeah, none of this will change everything tomorrow.
I don't know if you've read Paolo Cirone's book, and you use the word contextual banking. And he talks about contextual and conscious banking, but contextual is exactly that, where a financial service is not about the end transaction, whether it's a payment, a loan, credit, investment, and so on, where you go to the bank, but facilitating the customer before they reach there and finding them where they are. And you already mentioned some example of a software company. What I want to ask you, if we go at 35,000 feet, what industries do you think are better suited for this type of, for embedding financial services? And when I say better suited, I really mean that they get it, they buy it. Maybe there's more ideal customers in the sense of extracting more value or more revenues, but which are the industries, in your opinion, that get it already?
I could think about a lot of different examples from different areas. What I like a lot is I think it was Matthew Harris from Bain Capital who put out this, or who when he looks at embedded finance solution, he always has this definition. So there are a couple of requirements. I think one is B2B companies tend to be very often better positioned. So I'm not saying there's no potential for embedded finance in B2C, but it's a lot harder. I guess only really big brands have a chance to offer embedded finance. On the B2B side, it's a lot easier. And then I think on the B2B side, you also have to narrow it down to data-rich, sticky services. I think that's the wording he uses. Basically, who like the data-rich part obviously enables them to offer better financial services. It's not just like, let's say, on the same basis as a bank has, but they have additional services. So I think that the prime example for this category is a lot of services around vertical SaaS. So vertical software as a service solutions who focus on specific type of companies. So that could be, for example, a SaaS software for healthcare professionals, for doctors, who basically can manage their whole clinic in the software. And as part of that, obviously, when doing a lot of the activities in the vertical SaaS, many of them also touch base with finance without being like pure financial services. So very often it's invoicing, payments. It's a software that does a lot of the back office for these businesses, and it's very specialized. So it's doctors, it could be veterinarians, it could be construction companies, it could be a lot of different ones.
Builder communities in the UK are
for example, as well.
Yeah.
And at the end of it, they very often, like when they think about financial services, and it's a very, I mean, there are other examples as well, but there's a very focused example here. I mean, if we're saying embedded finance, there's payments, there's banking, there's lending, there's insurance, there's investment. When we're looking at vertical SaaS, there might be scenarios where all 5 of them is relevant, but very often it's a mix of banking, payment, and lending. And very often they start with payment. So they start something around like invoicing. That's the first need where they make the life of their users, the businesses easier. Then it's around like payments for their customers, being able to pay the businesses in various ways. And once you start with the payment angle, obviously you can very easily also think, hey, why don't I issue a card for them? Why don't I provide a bank account for them? Why don't I offer a different financing solution, lending products for all of that? And then very often you have these 3 financial products that work very, very well in the vertical SaaS context.
Lars, when I hear you saying that, what comes to mind is seller marketplaces.
Indeed,
like
as well, yeah.
Amazon has one, and Shopify, and many others, and Square in the US, and many other places. But it doesn't seem to me that before we invented these terms, all of them had some type of embedded finance, whether it was in payments, whether it was in lending. Amazon comes to mind, in collaboration with banks. But it doesn't seem that it's been a huge success in scale. Then, we don't talk about this as a huge success model. Is it because the banking as a service providers were not that evolved? Do you have some thoughts around that?
I mean, depends how you define like it wasn't successful, right? I mean, for example, and I think what I totally agree with you is that this was in the past very much only something for very, very big technology corporations, possible to achieve, to work with those infrastructure providers in the background. I think what we're seeing now through a shift in infrastructure providers that you can build the same solutions with a fraction of the cost. This is very often very specifically targeted at those companies who are not able to invest, let's say, a couple of million euros or US dollars into such products. And that was pretty much the investment that those bigger companies had to do, right? But I mean, let's look at companies like Shopify, who I think with their unit that is mostly financial services, they make more than 70% of their revenue with financial services. Obviously, a strong focus on payments, but also with banking and financing and lending products. But obviously, again, Shopify is very well positioned, and there are other examples in the marketplace environment. I think marketplaces, and I picked earlier when you asked me about like the industries that, or the areas that work best, vertical SaaS. I think what most people would say, vertical SaaS and marketplaces are typically the 2 areas where it's expected the next month and years in embedded finance will hit the hardest, and also in marketplaces, because obviously the whole interaction on the marketplace where you get payouts, why not directly into a wallet of your provider? Why not being able to access it immediately with a card, do all of that? But yeah, I think now it's also accessible for smaller marketplaces, where earlier it was maybe perhaps limited to an Uber, Shopify, Accenture marketplace, but like there's the same concept behind that.
Yeah, understood. Now, I mean, we've had a lot of, how can I say, excitement, but not in a very positive way recently in the banking as a service subsector, with mainly what is going on in the US. I must admit that I've been waiting for Jason Mikula to put out his, news letters around what's going on in the troubles that some of these banking as a service providers and the banks have had. And because of that, I wanted to ask you and share with our audience, how is banking as a service different in the US than in Europe? Or let's start more, simply, how does banking as a service work in the US, since to my knowledge there isn't open banking regulation like we have here in Europe? Everything's more market driven.
Of course. I think like not even looking at a specific country or geography, Where at the end of it, to be able to consume or offer a bank, or like for somebody to consume in a banking as a service product. So let's say a Shopify is a big company, or even a smaller vertical SaaS. Let's pick a software as a service company who focus on doctors in the US, and they want to offer now banking and card and maybe financing products. They're typically like put it very simply, like two elements you need, right? There's one, a technology piece. A technology piece that allows you to build the product on top, so you don't have to build the whole logic and understand all of that. And the other part is the regulatory side, is a license that covers you to exactly do that, right? I think the main difference between the US and in Europe is that in Europe you have this concept of e-money institutes, which is basically a license that allows you to make it a little bit simpler, but in a way gives you the capabilities to issue cards, to create accounts, payment accounts that you can treat like more or less like bank accounts, and do a lot of the services functionality around that. That doesn't exist in the US. So in the US, you need to be a bank to cover the license part. So typically, if you are in the US, you want to build an embedded finance product or work with a bank as a service company, you typically have a list of technology providers that you can work with, and those are the ones that very often we have seen now in Jason's newsletter every week. I think in the last couple of weeks there was one story around one of them, more or less. This is the technology side, and then you need a bank sponsor or a bank partner as well. And there are different models. I think back in the days, like in the late 2010s, like 2018, 19, it was quite common. You kind of go out first, you find your bank somewhere in the US, you talk to the smaller banks, because banking as a service is very often more attractive for the smaller mid-sized banks than for the big ones, due to some regulations. You find a sponsor bank, and then the sponsor bank was back in the days harder to find it, and then the technology partner. So you have to first look for the bank, maybe, then you will find the technology partner, and then you build your product. By now, with embedded finance coming more into focus, these technology partners now have, like, to various extents, relationship with sponsor banks, and some of them even offer a complete package, so to say. A company like Unit comes to my mind, who tries to offer it like that. It's still two different parties, right? You still have to contract with a technology partner, and there's a bank partner.
But they come with a combined solution, so to speak.
It might, I mean, in a way, it makes it, like, for the technology provider a little bit easier, always working with the same type of banks, right? Nobody wants to rely only on one bank, so it's not just one bank. But if you have 3 to 5 banks, you can probably cover a lot of different use cases. The banks might have different risk appetite and different preferences for different use cases. With that, you can cover it, right? It's better than maybe potentially.
And was that the case with the recent middleware trouble in the US, where the bank that was the partner was Evolve and Trust? And I guess, or they were not so exclusive?
I mean, Evolve and Trust, I think, is a bank that has, and I'm not an expert in the US space, but the last couple of years become very, very popular as a potential bank sponsor for different cases. So I think they were involved in different technology providers, or like working with different technology providers, enabling these kind of things. I think the challenge overall, and this is, I think, the red line we're seeing through all these stories in the US, but also let's look at Europe. I mean, obviously Rails Bank was a little bit different story, but also there we have seen in the European Union, in the regulated institute, I think Lithuania, some troubles around that. At the moment, we're reading around Modulr, some limitations are being imposed from the UK regulators. I think the easy answer is, this stuff is really hard. This is really hard because it combines a lot of different things from, like, technology side and regulatory licensing side. And at the end of it, you have this layering. At the end of it, the regulated institution, so in the US, the bank, in Europe, to an extent, the e-money institute, but also a potential bank partner behind that, is at the end of it the party who is responsible to answer to the regulator, but then they hand over certain responsibilities and things to their customers, the non-financial brands, in that extent. And at the end of it, it's the fine line, like, how do you make this really work, right? In a way, the non-financial brand doesn't want to touch all of it and be the party who builds all of that, but still wants to have a good user experience. And then the question is like, who does what? Like back in the days when we only had fintechs working with banking as a service, those teams were very skilled and experienced, and they wanted to control a lot. But now you have teams who have no idea about financial services, still want to offer it. It creates a lot of friction and challenges around that. So I'm, to summarize it, very, very optimistic around the concept of banking as a service and the potential it creates. It's also not very easy to make it work. So there are a lot of challenges for those players involved.
And from what you've said, there's a lot of different ways to look at this, and regulators are not harmonized in terms of how they're treating. It would be nice if you briefly spoke about this recent example of Modulr in the UK with the FCA. What is the trouble there? Because it sort of shows how complex, it's becoming a web of interconnectivity that is not as simple as the end user or, the retailer or the non-financial business thinks.
Yeah, I mean, I can't go into like too much into detail because I also don't know it. Obviously, what we have seen all is on the website of the FCA, of the UK regulator, that the e-money institute Modulr agreed with the regulator that it will limit will not onboard any additional agent anymore for the service. So as far as I'm understood it, it's not limiting Modulr to onboard any type of customers, so that they can still onboard normal type of customers. But in the e-money concept or in the regulation, it's also possible for Modulr to onboard other companies who again will leverage Modulr's license to somebody else. So it's like one layer more, which is commonly referred to as an agent or distributor. And there's a lot of, I mean, if you open up this discussion, there's a lot of different opinions and understanding and expectation how this should be working. I guess you have this challenge as usual that the regulator intended something in a way and build a framework or build a legislation for something, and real world has evolved, has changed, innovation, technology, and now it's kind of like catching up with reality and things. There's an expectation, I think, or in a way you could argue a requirement for adapting some of the regulations around this concept and bring them up to date. But I guess that in 10 years from now, 5 years from now, it needs to happen again. So that's a typical challenge of anybody involved in these regulations.
Yeah. I mean, this is, as you said, an evolving space which started with very simple payment solutions and, for consumers, and now it's become extremely complex and in some areas competitive, especially in the payment space.
For sure.
Lars, recently you hosted a meetup around the topic of embedded finance. It was a review of embedded finance. So since this was recent, I'd love to ask you takeaways from the interaction with the audience of this review.
Sure. I mean, also maybe to speak a little bit of my intentions and goals with this event, right? So my role at the moment, as I'm independent, I'm let's say freelancing, consulting, advising different companies around the embedded finance products. So I've been doing that since the end of last year when I left my last startup. So basically helping companies understand embedded finance and leverage the opportunities. I tend to focus, or my ideal customers when in these projects tend to be non-financial brands, because I'm typically most excited around their possibilities and helping them to understand fintech and embedded finance. So even the newsletter, Embedded Finance Review, and all the events, these Embedded Finance Review events, all serve the same purpose more away. I think what I also said at the event on stage is like, I think embedded finance has a massive opportunity. I think at the moment, there is not as much as we could have, because there's a gap between the two worlds, the fintech world and let's say the tech world and non-financial world. And this very, very, very small thing that I can be doing as an individual, I'm trying to close that. So with a newsletter, I'm trying to tell people who are not from fintech, to show them what's happening, what companies are doing it, how they're doing it, understand that space. And the meetup is basically like kind of an approach for the community, local community here in Berlin, bring people together from the fintech side, from the non-fintech side, get to know each other, learn about each other. Most of these companies, non-financial brands, or some of them will not build something today or tomorrow, but maybe next year, maybe the year after. And I always think it's good to prepare that, especially as a CEO. You have to look out and see what's happening in the next like 12 to 24 years, 12 to 24 months, maybe also years, but months. And it's a good way to connect to insiders, to learn a bit, to understand the possibilities. So when you get started with the project, you already have a good fundament of knowledge around these kind of things. So that's with the newsletter, with the event, that's what I'm trying to achieve, to bring both worlds a little bit together. Always thinking what other concept is there as well? Is there anything else I could be doing to help bring these two worlds together? So that's what I'm trying, and based on feedback, improving and hopefully meeting a demand for that.
Yeah, it's very interesting because you know, we finance fintech people talk in our bubble and don't realize that it's not at all understood how.
I find it so, sorry to interrupt you, but I mean this was also like one of the things when I did this newsletter. I mean, I've been working like in a startup, right, in an infrastructure provider here in Europe, a company called Weaver. I was there very early, and when you're early in a startup, you're a bit like an evangelist, or let's say a thought leader for your products, but also for if it's a new thing, for the thing. So we were in a way like exactly. So you talk a lot about embedded finance, right? And then I consume a lot of content around embedded finance, and what I always consumed was, or very often what I consumed was like some kind of like VC leadership, thought leadership pieces about embedded finance, like talking very generic, talking about numbers. It has nice infographics, gets shared, makes a lot of sense. But I always felt like, what is the actual, I mean, like somebody who is not from fintech doesn't care about these kind of things. They care about like actual products, actual solutions, understand how they're being built. So again, like the newsletter, I try to, I also share those insightful articles, but I'm trying to focus a lot more on non-financial brands and their story, how they approach it, the challenges they're having, and how they overcome it. And at the event, I mean, you asked that feedback was like very, very positive. It was a different representative, like banks and non-financial brands and infrastructure providers coming together, hearing interesting presentations. We had like non-financial brands from the healthcare industry who are developing fintech products. Another one on the B2B SaaS side who are offering financial products. And it's very interesting for companies who are very early in their journey to see how other companies have approached it and hear from their struggles and challenges, because all of them face that. So they can learn it. Very often those companies are not competitors, right? There's a person doing vertical SaaS for a doctor and then listening to somebody who does the same for craftsmen or construction companies. Those are not competition, but they can still very often learn a lot from each other and their journey. But typically they would never speak to. So maybe embedded finance events are
in a way you're adding a lot of value by enabling cross-industry pollination, which, you know, in many cases it's a bit like, you know, when COVID started, cross-industry pollination was important because basically everybody was facing, you know, the same problems. How do you do your accounting? You know, you can't go to your offices. How do you access your customer because you have a certain, you know, degree of you know, digital and so on. So it's extremely important to do that, and we need to do more
for sure.
as we're blurring, as technology allows us to blur the lines. Last question, Lars, from the embedded finance and open banking point of view, are these non-financial business people, is their first approach better customer service, especially on the B2B side, or is it because they are seeking additional revenues, you know, beyond their business?
Mm-hmm. It's a good question. I mean, as you said, there are multiple reasons, multiple benefits for embedded finance, right? Revenue is a big one. Attracting new customers could be another one. Stickiness is another very relevant one, because obviously financial products are sticky, and if you if you use Shopify and you get payout into your bank account from Shopify, then maybe switching to somebody else might be harder, right? And I think in the competition between Uber and Lyft, we're also seeing very well how embedded finance or financial products can be used for directly competing with other players and in a way create the stickiness and leverage in your advantage, right? I think it depends a little bit on the company, where they're coming from, what the biggest benefit is. Specifically now in the downturn of company valuations and funding limitations, obviously additional revenue was an interesting one. Specifically, growing your revenue without growing your customer base, just making more money with existing customers. That was an interesting and relevant point for many. I think for many it's a mix of all of them. I don't think a tech leader. I think that they very often have they look at their revenue, of course, and they want to grow your revenue and do that. But I think when you go in the direction of embedded finance, it's not only you think only about the revenue. I think very often you think about your product vision and how you want to like capture the value for your customer and put them all together, right? So I think revenue is an interesting angle right now, but I think the combination with like having a sticky and in a product that solves the pain of your customers is the more important deciding factor at the end of it.
The first sort of way they approach it. Lars, thank you so much for sharing your insights. Before you leave, a more personal question: what are you reading these days? What's inspiring you? What content are you consuming? Whether it's related to banking and innovation or not.
Yeah, what I'm reading is a good question. As mentioned, I write this bi-weekly newsletter on embedded finance. So I'm actually I'm using this tool called Feedly, where I'm reading all my news basically. So a couple of times per week, I'm going through this list, and there's like newsletters in there. We mentioned Jason's newsletter already, very US focused, but of course from like Sifted and Finextra, all these typical sources that a person who is like heavily involved in the fintech ecosystem reads. I'm reading that as well, and selecting the best ones for the newsletter in terms that are embedded finance relevant. Otherwise, let's say in the evenings, on the weekends, always trying to consume content also, which is a little bit outside of the typical things, because as I mentioned before, that's typically where you get like very, very, very interesting inspiration and things. So I think right now I'm reading a bit of I think a little bit older book. Is called How to Make an Atomic Bomb. It was recommended. I'm still at the very, very beginning. It's quite a big one.
Is it fiction? Is it fiction?
No, it's not. It's non-fiction. It's actually the actual story of the development and how people.
So did you go see the movie Oppenheimer or not?
No, but I need to do that. So I'm just thinking if I should first finish the book and then see the movie, or do it right now.
Books are always better. You know, yeah, they really get you into the actual story. And
yeah, for sure.
I would finish the book and then go see the movie.
Maybe I do that. It's also a good incentive for me to read the book and finish the book. It's quite a thick one, so have to spend some time on that one.
Okay, Lars.
But thanks for having me. I enjoyed the chat.